Have snapped that line. I'm going to take it up. Kunal, quite a bit of flip-flop for the markets like we were earlier talking about as well. After that 15K mark, we even breached 14,900, now attempting again a comeback, 39 points higher. Breath was the first to come off. But then again, besides SBI, there's lots that is looking lively. You've got an ITC, Nikunj was just talking about Reliance, private banks holding up, names like Tata Steel as well looking good. As an indicator now, given this volatile bout that each time we see after hitting a landmark level, last time around it was 50,000 coinciding with 14,700 on the Nifty, and today after hitting 15K as well, what is it that you're mapping on your screens?
Just to map, Aisha, first, so, what happens is generally these round strikes or these round numbers, they act as, good, I would say, pivot points and, hinges for the indices. Now, there are clear reasons for that because there are option traders who especially take, major bets on either the weekly or the monthly options, and they prefer more of these rounding strikes. So whether it's 14,000 or 14,500, 15,000 and so on and so forth. And which is why whenever you see the index coming or, suddenly coming towards these kind of levels, there is a bit of a mix and match. There is a bit of a retracement which happens because there are closing of positions which tend to occur at those levels. But they should be taken with a positive stride because it's just a temporary phenomena where the option writers, they changed their strikes from being at, say, for example, 15,000 to maybe higher levels of 15,500, etc. Because you have at least a couple of weeks more for the Feb expiry. Now, the other part to look at is that you still have a lot of the underperforming stocks. So as I think what Nikunj was trying to indicate that Reliance is underperforming. Now, the question in a bull market is not that whether the stock will move up or not. The question is that when will the stock participate and get back into line. Now, the Nifty has moved up almost 4,000 points from the 11,000 levels in the month of September, where Reliance topped out at 2,300. So there's this big divergence which is there between the index with respect to Reliance. Now, I think if the Nifty has to move up higher, for example, from current levels, then you know that Reliance is still one candidate which is still yet to perform. And if Reliance performs in the manner in which we had seen in the start of 2020, then that could act as more fillip towards the market. So this difference of nature for the index where you have not the large cap traditional names like the ICICIs and HDFCs, etc., or Maruti, which are leading from the front, but you have the other set of stocks like the SBI. A couple of days back we had IndusInd Bank, and these are the stocks which are doing pretty well. Now this difference of behavior indicates that it's now maybe a time where the second rung stocks of the underperformers could take the lead from the front, and I think which is why Reliance stands a good chance at least over the next 1 or 2 weeks to try and cover up some of the underperformance.
Sabarad as well on the show with us. Mantesh, I'll come to the star today, SBI, in just a bit. But first, really on Reliance Industries. Some takeaways from Jio yesterday when the Bharti management indicated that there is only one way for business sustainability, and that is for tariffs to move up. But they also said that they're waiting for the competitor to actually take lead, clearly hinting towards Jio. What is it that you're making of what could be the next trigger forward for Reliance?
So I think we have argued in the past as well that Reliance is now linked. Reliance Future is now linked to how the telecom vertical performs, and we have seen that for the industry as a whole, there has always been a sequential growth, quarter-on-quarter growth in the ARPUs. That's been a phenomenon now lately for the past 3 quarters, 4 quarters, and that trend apparently will continue as far as I see it. But then if you have now Bharti Airtel hinting at something like let the industry take a further viewpoint in terms of raising tariffs, I think that trend seems to have broken somewhere in between, and that's partly due to the upcoming 5G auctions or how the 5G strategies will play out. But nevertheless, I would tend to believe that the sequential ARPU growth trend will continue for the industry. It may appear to have broken just for 1 quarter, but that trend will sustain thereafter is what I see. And therefore, as that tariff rationalization happens, we should see the telecom companies come back into the focus. So the current lull in the stock prices is perhaps just awaiting this tariff rationalization move.
Back with closing trades right here on ET Now, flattening out once again. So any uptick is getting sold into, although the dips as well are getting bought into. But I can't say the same about the broader end of the market that continues to reel in favor of the declines. Well, so 103 stocks, or 104 actually to be precise, standing to the declines as we speak. Z, Bandhan Bank, LIC, India Bulls, L&T Finance, all under pressure as we speak right now. There's also Bharti, which is at 583 now. There's Marico, there's TVS Motors. All are facing a fair amount of pressure as we speak right now. But all eyes on two earnings. That's, you've got M&M, which is already out with its numbers. And then, of course, Britannia, which is slated to come out with its numbers as well. Mantesh, we were just chatting about this earlier as well as to the kind of RM cost pressures that, staple companies are going to face. Most managements have already indicated the same in their commentary with us all along Q3. But you think more so for FMCG, this is going to be a niggling factor? While they will try and pass it on to consumers, but margins would get impacted thereof.
Absolutely right. When you have a commodity cost pressure coming in, margins will get impacted, and there's always a lag in the pricing that you can exercise, pricing power that you can exercise. Coupled with the fact that you are in a situation where you are restocking your inventories back into the to your dealerships. The COVID phenomena was the exact reverse. We were actually seeing destocking happening. There were too much of inventories lying around, and the focus was on destocking. But now you can clearly see that the economy has been reviving quite rapidly. Capacity utilizations are up. Normal activity is happening, and therefore restocking is the focus for most of the durable as well as FMCG companies. And in this restocking process, when you have a raw material cost push coming in, there is that additional delay or added delay in that margin of a price increase coming in. That is the margin expansion coming via the price increase coming in a little later. This delay is what will cause the reported margins, at least for the fourth quarter, dip sequentially. That's the common factor that we anticipate with most FMCG and consumer durable companies.
I can't say the same about ITC though not a purely FMCG play, considering a larger, or rather the largest chunk of their revenues comes from their cigarette business. That continues to hold off at 52-week highs for itself. Where is it today? It's cooled off from the top, but still sitting on gains about 0.7%. Can't take your eyes off from SBI, 10.25% higher. Mantesh, in line with SBI and the kind of commentary that they've given, that they actually see a strong credit growth revival come the second quarter of FY22, would you bet on any other PSU banks as well? Or would you say stick with the leader, stick with SBI, where you've gotten assured commentary from the management?
See, what is different this time around for PSU banks is that now they are coming off a situation where there were a lot of NPAs in the past which have been provided for, and the upcoming NPAs are likely to be lower now that the economy is normalizing. So for the PSU bank as a whole, the only picks that you should be looking at are those which are adequately capitalized. Unfortunately, most of the PSU banks are not well capitalized compared to the private sector peers. But when that capitalization happens, that growth can be quite substantial for a PSU bank, given that their franchise is typically larger and deeper relative to a private sector bank. But there's also one more thing that you should be careful and wary about, is that the government is talking of a divestment or complete privatization of at least one bank, two banks. I'm saying at least one. They mentioned two banks in the budget, but I'm not too sure which those banks would be. So what happens is, in the market you will see that a lot of PSU banks will go through that round of speculative talk about is this the one that will be identified for divestment. We do know for one that IDBI is one of them, which will be sort of privatized. So that privatization wave is something which will drive a lot of PSU banks up. And if none of those, the ones that you pick are not the ones which are going to be privatized, you will see a large disappointment come in the form of a stock fall. So volatility will be very high for PSU banks. Given that, I would rather recommend that one should not look for these PSU banks right now. Look for simple signals. Are they well capitalized? Is the announcement clear in terms of the bank going to be privatized? Then you can take stock and look at that particular PSU bank. So right now, I wouldn't recommend any PSU banks. Of course, I can't speak for SBI. So excluding SBI right now, not many PSU banks would appear very attractive.